What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today, BTC USD. It is the 20th day of August, and you might hear a baby crying from time to time because she's up. I normally make videos whenever she's asleep, so if you hear any baby noises, I live in a house with a baby, so that's just how it is. Anyways, hit that like button, subscribe. Thank you all for being here. Yes, I cut my hair. 72.3K is the price. 7 hours, 36 minutes left in the day. We are up 4%. I cannot believe that we are actually up this high, you guys. This kind of price action genuinely does. It is sufficient enough to really make me start to believe that the bear market could be over, which is wild. We're going to talk about what that means and what that looks like if the bear market is over. It's still completely possible that we do go lower. It's a bit up in the air right now. I'd say we're at like a 50-50 maybe. It's definitely, this is not bear market behavior. I mean, we look at this here. As far as this week's concerned, 3 days, 8 hours left. If we can close this week here or higher, have you seen a candle like this at all in any of these bear market drops that we've seen? No. The last time we saw a candle anywhere near this magnitude was at the very end of the bull market. And any time that we've seen it before was, again, in the prior bull market. This is bull market behavior. It genuinely is. And if we have not found the bear market low, what we can say is this is a really odd way to end the bear market. If we have found the low already, still something out of the ordinary for Bitcoin. This is unprecedented behavior this early in the cycle. There is such a thing as a left translated cycle. What is a left translated cycle? It basically just means it's a shorter cycle. Okay, a left translated cycle is a technical analysis term where the peak or highest price point of a given market cycle, it doesn't have to be the peak, it can be the low as well, occurs in the first half, the left side of its total time frame. This contrasts with the right translated cycle where the peak happens in the second half. Well, I guess you could say that it's right translated in the sense of it being a prolonged bull market. The bear market's left translated. I don't know. Is it only 4 bull markets? I thought it was... I mean, the whole cycle itself might be right translated. I guess that makes sense. Yeah, the whole cycle itself. But if the whole cycle's right translated, that means the bear market is left translated, to the left, as in it ends earlier, right? Because to the right is further out here. To the left is not as far out time-wise, right? If the bear market was supposed to end here, it's left translated. If the bull market was supposed to end here, but it ends over here, that's right translated. However, in accordance to the 4-year cycle, the bull market ended basically where it should have ended. The bear market still more or less respects the 4-year cycle, but again, this little slight translation, this deviation, it can happen in any and all markets. Anyways, Bitcoin, it really is very similar to the last cycle's bear market low. And I was very reluctant to think that this would have the same result. And so far, it's not necessarily the same, but it's very similar. You know, moving sideways. Overall, last cycle, once we found our low, come on now. Maybe I should do this on a weekly time frame. Weekly format's fine. Whenever we found our low, we didn't consolidate much before kicking off the next bull run, right? It was about 8 weeks, and then on the 9th week there, we popped off. Whereas here, we consolidated, in this low range, we consolidated for about 18 weeks. More than double what we did last time. We had 18 weeks of consolidation before popping off. If we're on, not the Binance chart, but we look at the regular index. Come on now. We go to the prior bear market. We were consolidating in this range. I mean, really, we didn't start breaking out. This is when we got higher. That was like 41 weeks. And at least from low to low, that was 31 weeks. So just an extremely large amount of time that we consolidated at these low points. The reason why it was only 8 weeks last time from here to there before we moved up is because we were consolidating before the low. The other 2 times we consolidated after the low, the prior 2 bear markets to the last cycle. So the 2015 bear market, the 2018 bear market, we consolidated after the low. Whereas last cycle, the 2022 bear market, we consolidated before the low. Here's the low. We consolidated beforehand, and we had 29 weeks of sideways consolidation before we actually kicked off the bull market. That is how I've rationalized why we did not consolidate for a long time after the low was officially in. Okay? Here, it's the same kind of idea. I mean, really, realistically, I am not coming on this video saying, that sounded naughty, I am not here to tell you on this video that the bear market is over, that the bull market has begun. I'm still skeptical, but I'm more of a believer now by a large degree. You guys, again, a few days ago, I was saying 20% chance the low is in. Now I'm at like 50-50. That's a big deal. Like, we're talking about macro market dynamics here. This is not flip-flop, wishy-washy stuff. It takes a lot to change those kind of dynamics, at least in my head. And 15% up in a week. Again, we haven't seen this from Bitcoin at a sustainable level since the bull market. And that does, and I say sustainable because 3 days, 8 hours left in this week. If we come back down by the end of the week, we've had weeks that pump and then dump. We've seen that in the bull market, or in the bear market, I'm sorry. It's kind of the opposite of like what we saw here when we were in the bull market, right? You dump and then you pump back up. Anyways, we don't have a tremendous amount of volume here. It's not low. It's definitely adequate. But you can see here, we're not seeing a tremendous amount of volume, where here, you know, in the last cycle, whenever we came out of our bear market low, there was a tremendous amount of volume coming in. You see that, right? You go to the cycle beforehand, even coming out of the COVID lows, there was tremendous volume coming out of this. Whenever not when we were consolidating, but when we broke out, we definitely saw not crazy volume like this, but above average volume. Here, so far, we're not getting above average volume. It's actually lesser volume. So that, and this is on Binance, the biggest Bitcoin exchange in the world, the biggest crypto exchange in the world. We go to Coinbase, it's probably the same thing. Yeah, same thing. So that is something that concerns me a little bit, and that's part of why it leaves me 50-50. But we're going to go over these dynamics. We're going to go over the long-term stuff, get back to the index here. I was using Binance and Coinbase because the index volume, I don't really trust it. I don't know how accurate it is. I do trust Coinbase and Binance's direct volume on TradingView here, though. Again, I don't know how accurate that is either, but people are like, well, the volume's BS anyways because they're bots. Yeah, but bots trade, man. Bots help push the price up or push the price down, you know, like they help keep it range bound. It's all, that volume still counts. Just because it's automated, I still think it counts. There can be like spoofed volume. There are ways to do that. But with Bitcoin, I don't know. I don't know how much that really matters. Anyways, looking at this here on a monthly basis, the RSI did see a lower low, and that was one of the prerequisites that I personally had in determining that we were at the end of the bear cycle. I personally expected that we would go lower. I was thinking that we'd interact, if not be just above this oversold zone, but hey, I mean, in all fairness, every single cycle, we've seen a low, a lower low, a lower low, a lower low, and here we got a lower low in this RSI. After we've come down from here and we get above 45 on the RSI, okay, every single time, that has marked the bear market low. That has, and we're not there yet. It's the 20th of August. We still have, again, there's a lot of time to screw things up, and we are in a screwy cycle in itself. Things could definitely get screwed up. We're seeing a bear market like we've never seen. All I'm saying by that, by saying it could get screwed up, is that we could see a finish. You know, we saw a bull market like we've never seen before with the way that it finished. We could see a bear market finish unlike any other bear market before as well. Whenever we got above the 45 here during this cycle, the bear market was over. We were breaking out. We were in the midst of that breakout. This is on the monthly time frame. We got above the 45 here. The bear market was over. I guess we still did pull back. In all fairness, we did pull back. We had a double bottom, but the bear market was over. We were within a quarter of a year before the bull market actually started. And then back here, we didn't go low enough, whatever, you know, but typically these kind of bounces, they mean something. And again, we still have 11 days left in this month. We're only up 15%. We can definitely come down 15% in 11 days. We've done that in less time before. But looking at this here, beyond just the RSI, the stochastics themselves. Hold on, guys. I gotta fix this. It's gonna be a pain in my ass. I need to get a new charger, is what it is. You have kids pulling on your cords all damn day, not respecting your things. I sound like my dad. All right, let's see. Whenever we got oversold here, I'm gonna go based off the orange line. Let's blow this up so it's a little bit easier to see. I'm gonna go based off the orange line, okay? Because I think the orange lines, it matters more. I think the blue line's a little bit more dynamic. It moves a little bit more freely. It's like the faster moving oscillator. But anyways, I think the orange line's more significant. So from the time that it got oversold, to the time that it got out of the oversold zone that it took to get out of it. You were still in it here on the 9th month, so I'm going to say 10 months there. You got into it not here but there, and you got out of it not here but there. 10 months again. Wow, I didn't actually know that. You were out of it here, just above it there, so then it would have been this month here that you were in it, and then this month here that you were out of it. That was 6 months. Here, again, I told you guys there's going to be a baby, right? Crying. I don't know if you can hear that, but let's see. 9 months there, 9 months, and then here, as we've been, I'm going to move this around, man. I don't know what's going on. I don't want to plug it in on that side because I don't want it to mess with the mic. Let's try it again. I've noticed that whenever I plug them in next to each other, that's when that little static feedback comes in. I don't want that. It's the charger cable, man. It's acting like it's charging and then it's not charging. I'm going to turn off the volume so that we don't keep hearing that noise. And if that's the case, I just might have to say screw it with this video today. It just might be this video because the laptop is almost dead here. Anyways, that's not what I meant to measure there. So we're out of the oversold zone here. Now you're in it right there. It has been 6 months. Assuming that August closes here, green or higher than where it is now, that'd be 7 months or longer that the orange line was in the oversold zone before it comes up out of the oversold zone, right? We're assuming that we're on a path of recovery. If that's the case, it could be 7 or 8 months. We've seen 6 months. We've seen 9 months, 10 months at the most. It kind of makes sense. It kind of makes sense, personally, that this would be the time frame that we would start to see the bull market come to life, that we would start to find our low. And I did expect for a long time, I did expect that August would be the low. It just turns out August is the month that we may be proving that the low is already in. It's actually June or July. What was the month that the low was in? Was it July? It was the end of June. It was the very end of June. This is a very early cycle. Very, very early cycle, you guys. I'm sure we're all aware of this by now, but just going through this, I'm not going to count this. I really have a hard time imagining that this was our first bear cycle. I think this was all one bull cycle and that this was really our first bear cycle, personally. But whatever, you know, to each their own. We can all measure it our own way. If you want to measure that and count that in your own analysis, that's fine. I think it's an outlier, and I don't think it's going to help you in your analysis. But from a high to a low, again, just measuring the bear market itself, not the crab cycle, the bear cycle. This is not part of the bear market here. This is just part of the boring lull. Bear market is down. Crab is sideways. Bull is up. Bull market here ends to the bear market low right here. Again, not counting the slow times before we move up. That's 12 months. Bull market ended here, but the bear market didn't start here. Again, there's that crab cycle. So from a high to a low, the bear market really took about 12 months, depending on how you measure it. This is how I do it. It makes sense. They're all kind of in that similar time frame, 14, 12, 12, very close together. We look at this here, bull market high to the low, which was in June. It was in June. That's an 8-month cycle. 8 months, you guys, is the shortest cycle we've seen by a significant degree. And if you think about it, if you really think about it, the all-time high, sure, this is where it began, but if we measured from like where the bull market stopped, again, we were kind of moving sideways here. The bull market stopped really like back here because we didn't get much higher. These were fake out highs. And with that, we have an 11-month cycle. Incorporating this boring time, it kind of makes sense. And I don't know, 11 months, maybe 11 months is inappropriate. It should be 8 months, and perhaps we have another couple of months to go, or maybe this cycle lasts longer and we're just seeing a really screwy cycle. Again, it's completely possible that we do go lower. I have not forgotten about those targets below 50K. It's very much still a possibility. But this move is unprecedented. I mean, it's very precedented if you're expecting it to be a bull market, right? This is crazy stuff, man. And I'm willing to accept that I was wrong. We just need to see a little bit more. I mean, at the end of the day, there's no doubt at all that we're in a bull market if we get above this high here. If we get back above 83K. I would hope that well before 83K, I would start to be actively saying that we're in a bull market. And just because I'm saying that now, kind of, doesn't mean that we are. Doesn't mean that I'm full-blown bullish right now. And it also doesn't mean that we can't see a pullback before actually moving up higher. Maybe we are in a bull market. We could still go back down to about 63K, 65K, and then move back up. There's a lot of liquidity down there. We go to the 30-day time frame here on the... man, it's so nice when the price moves. There's so much to talk about. You don't get significant macro stuff like this all the time. A lot of people think that because there's no shorts that the price can that we're probably going to move back down, but the same thing happened at the top. Because there were no longs and it was just short dominant, people were expecting that the price would come back up. I was, and we got hosed. The price kept moving down, even though there was nothing but shorts and there were no longs. All the liquidity was quote unquote to the upside. People still got wrecked. There was plenty of liquidity to the downside. This doesn't, I think, encapsulate the full scope of all the available liquidity that's up for grabs and stop losses and stuff like that. It goes beyond just leverage trading and stuff like that. And even in just leverage trading, in these liquidations for leverage, I don't think this is fully accurate either, but it's close. I think hold on. Sorry guys. I knew that she'd be crying. I didn't know she'd be crying so much. I don't know what's going on. My wife's got her. Everything's fine. She's with somebody who loves her. She's not being neglected. But yeah, I don't know what's going on. I'm going to end this video up very soon so I can just go help and check out and make sure everything's good. Looking at this here, again, a lot of longs. A lot of longs get cleared out, all the way down as low as 61K, 65K. That's the thing, you guys. And in response to what we've seen in prior bear markets, we could go all the way back down to 61K. We could spend a whole year in this area. We've done it before. We did it in the 2015 cycle. We saw a time here in two bull markets ago where we did not see a higher high for, how many months is that? 17 months. For 17 months, we didn't see a higher high, maybe 16 months, whatever that is. Crazy, right? We can be sideways for a while just because the bull market might be starting right now. We're seeing bull market like things. Just because it might be starting right now doesn't mean that it's this nonstop all year. Okay, there will be pullbacks. And on that note, let's actually observe what the first pullbacks typically are. Right here, from a high to a low, what did we see? We saw a 22% drawback. The last cycle, whenever we pulled back, I mean, really, you didn't have a pullback until like high to low here, 14%. 14% is still a big deal. We're up 15% this week. That's that whole week given back. So, I mean, just again, back below 65K with that. But really, I mean, it includes a black swan event. I don't know how fair it is to measure this and compare that to what we may or may not see now. 72% seems a bit extreme. Maybe this would be comparable, 34%, maybe this overall, 53%. Again, black swan event with COVID, the COVID crash. I don't know how fair of a drawback that is to compare to. I'm going to try to end this really quickly here too as well, but 40% there, and that was an earlier cycle, so these 40% drops are probably less likely to happen. We're probably not going to see that now. There's just so much demand, so much buying pressure, so much institutional centralization of this coin and just demand there as well. Every time it moves down 10%, there's going to be buying pressure, or more, 10%, 20%, let alone 30% or 40%. All that to say, we've seen it in the past where we have, after we started the bull market, dropped 20% or more. And that would take us back to our lows. If we stop here, it's completely possible that we could see lower lows. Maybe this is the rumblings, the beginnings of a bull market to be. But just because that's true doesn't mean that we can't see a lower low. Maybe the bear market's ending and it's, again, it could be this long kind of drawn out sideways process. Maybe not so much like this. I doubt we get 4 lows in the same general area, but you get what I'm trying to say. Just this long drawn out sideways process where there could be multiple times where we see prices back below 65K. So it's exciting. It's great. It's one of those things that if we do just launch from here and we continue to rip, I'm happy with that. I'm totally fine with that because I am very much like fully deployed into crypto. I've got some cash on the side that I wish I put into this before, and not just Bitcoin, but maybe other cryptos before they launched, but whatever. It's always good to have some dry powder, and I'm looking to buy on the next pullback, whenever that is. I'm in no rush to buy. If we see some kind of insane run up like we did in the 2019 cycle, we see some kind of insane run up here, I will wait for a pullback. I will wait for that drawback. It will inevitably happen. And again, as we've seen in the past, these kind of pullbacks, they hurt the price tremendously. We had 17 months where we did not see a higher high than this. That's not good, guys. That's a weird bull market, okay? And we had the COVID crash on top of that. Again, I wouldn't incorporate all this, but this was before the COVID crash. COVID wasn't even known about until December of 2019, so we were dropping before then. You know, I don't know if it was orchestrated. Maybe the elite were aware of it beforehand. You know, there's that kind of possible dynamic. But all I'm trying to say, guys, is I'm in no rush. I'm in no rush to be frantically FOMOing into crypto and be bullish right now. It's exciting. It's nice. This is one of the few times where it's actually nice to be wrong. As long as you're allocated into crypto. Hopefully nobody sold the lows, right? This was a terrible time to sell. We were heavily advocating for selling and going short and not, at least not buying here because we expected to go lower. And throughout this time, we did say that it's a good time to buy short, but if you really wanted to go heavy, we were expecting the lower prices, that would have been a good time to do it. It still might be. It's still possible. It's hard to say. But I will say this is not bear market behavior. This is definitely not bear market behavior. Damn it, man. There's one last thing that I wanted to do. Things seem to have quieted down, so I'm gonna do this real quick, okay? Maybe we'll just compare the last cycle because this cycle might not be comparable, or we can even go here. It's lower market cap. It's less institutionally involved. It's bigger swings, so it's kind of harder to make this same statement, but I'm gonna go for it here, okay? Here we're gonna use closing candles because it is earlier, because the liquidity is less immense. We found resistance at prior support. Exclude the wicks, closing candle periods. We found resistance at prior support, okay? We go here. We found resistance, closing resistance at prior support, okay? We found resistance here at prior support. Once we broke through that resistance, once we got through that prior support, that's whenever we officially were saying, okay, the bull market's starting, or at least the bear market's over. This cycle here, kind of different because the bear market was actually just one giant triangle. So we had a lot of interactions in between this zone. There was no kind of structure other than the pattern itself. So it's not really fair to say, but the bull market undeniably started once you broke above those prior support zones, right? We absolutely had the bull market then. Nobody at this point was saying that we were in a bear market. We look at this here to the cycle before, the last bear market that we had. Where did you find resistance? Right here at prior support. Where did you find resistance here in this little consolidation phase? You found resistance right here at prior support directly there. Where did you find resistance here? Directly at prior support. That's bear market behavior. That's bear market structure. When was the bull market officially in? Whenever you blasted through prior support. You didn't find resistance at prior support, right? You actually blasted through it. So that was the first implication, first indication. Then you get the higher high, and at that point it's over. There's nobody's arguing that we're in a bull market at that point, or if they are, they might just be left behind. Same kind of concept here. What was one of the strongest cases, in my opinion, for us still being in a bear market, and still could be. Again, things can be weird. We could be in this kind of like wedge down, and October comes around and we're down at 50K. Understand, if the low happens, it's not going to be in August now. It's probably very likely not going to be in August. If we were to go to 50K or lower, that would be probably October, November, December, late. It could be early 2027. The reality is, as exciting as this is, you guys, we still could see a prolonged bear cycle that goes into 2027. We could get that right translated bear market or that left translated cycle overall, because if the bear market lasts longer, it's a left translated cycle. That's typically what happens, right? Isn't that what it would be? I think that's right. Anyways, it's completely possible this is the low and we don't go below there either. I'm not really leaning one way or another right now. I guess if I was leaning one way, I'm kind of leaning more bullish now, just because this is unprecedented behavior for bear market stuff. But again, we are finding resistance here at prior support, and then we broke through it. If it was a fake out, okay, we've seen fake outs before, we've seen wicks, but man, 3 days left, we're up so far, like it's really hard for me to imagine that it's a fake out, but the volume is one thing that's kind of saying, hey, hold up, man, maybe not. And I know we're on the index, but Bitcoin, we did it on Binance, we did it on Coinbase, same thing, man, any exchange, it's all sub-average volume. If it's above average volume on a very small exchange, look up how much volume it is compared to Coinbase or Binance, it's probably not that much volume. Here, we found resistance at prior support. Here, we found resistance at prior support. Here, we're finding resistance at prior support, but now we've broken out. Again, just all these, along with the RSI on the monthly time frame, the stochastics on the monthly time frame, even the MACD. We're right in that same area where the bear market low was here, whenever we were coming out of Coming out of the bear market lows, we were scooping the zero here. Same thing, these oscillators were down right here around the zero, and boom, we're right here around the zero as well. You look at the weekly time frame, the weekly RSI. I mean, I was really under this perspective, under this thought that we were still in a downtrend throughout here, and I thought that we'd come down, but we broke through it. We've broken through the downtrend. At this point, officially, we have. So there's a lot of large macro factors, dynamics that are taking shape right now that suggest that we are in fact at the end of the bear market. As this video's gone on, I'm just like, dude, it might be time to call it. We're still not there. We're still not completely there. Again, I'm like 50-50, more leaning toward the idea that sure, the bear market's over. But I'm still very open-minded to the idea that we go lower. I'm not holding my breath. Like I said, there's some cash on the side. I'm not gonna FOMO in at these prices. Even if we are in a bull market, I'm still very much aware that we could go back below 60K. Even if we're in a bull market, we could go back down to 57K, guys. We could see a slightly lower low, and maybe we're not in a bull market yet. The bear market's not quite over. We're just in this overall overarching crab market. Maybe the bear market did end here, but we're still in this sideways zone for the next 6 months. I don't know. We've got a lot to figure out as time goes on, but the Fed saying they're going to double their balance sheet and add to their long-term bonds, that I think that's what's causing this, man. I really think that's what it is. Maybe there's some other underlying things that we're not aware of yet that haven't come to light, or maybe they have come to light today and I'm just behind the times. Let's see. Bitcoin pumping. Let's just get the DGen news. Better traders read for August 18th separates current states from future. Yeah, Bitcoin surprise pump meets lost support as mixed markets demand precision. I don't know about that. That sounds like cope to me. No, I want. Give us the most recent. Let's go past 24 hours. 3 reasons why. Well, let's just see what they say. Let's see. Institutional capital forces, massive short liquidations. Yeah, they weren't that big, but yeah, sure. I mean, it's a lot of money. Don't get me wrong. It's just not like crazy. Where's the? Yeah, it could sweep below 67K. None of this. This is not at all. It's a very misleading title. Whatever. We're gonna move on. If we go to the heat map. Let's see. Go to the heat map and not do the 24-hour. We'll do the 1 week. Come on. This is what I get, man, for having bad internet. There are a lot of longs to liquidate down there below 63K. And again, the bear market could be over, but we could still go below 63K. Right? I'm not in a rush. What I will say is this. If we're not, let's say we are still in a bear market. Let's say we have lower lows to go. Even if that's true and we have lower lows to go, when we're back in this price range, we're going to be a lot louder about buying than we were. We suggested it a couple times here and there, right? But again, heavily suggesting, waiting for lower prices. It's different now. And I have a feeling that I'm not the only person who thinks that way. Not the only person, not the only entity, not the only group of people, whatever it is. I would assume we're going to find support down in that area. But there's a potential that we could go there or even go lower. Clear out some of these longs, and we blast it through those shorts. Clear out some of those longs and then move on. If we go through the last year, let's go over the last 2 years. Let's do that. They only do 1 year on the mobile. 2 years is a long time. Let's see how that compiles. It's going to take some time to compile. That's okay. It's because I have slow internet. It's taking a second. T-Mobile 5G, you guys, if you're thinking about it, don't think about it. You've got your answer right here. It's clearly a sham. You shouldn't get it. Yeah. Not only that, But with this excellent service that I'm getting and that we're all witnessing right now, they also upped their monthly rates for internet. So, well, that sucks. That's unfortunate. Um, I'm not going to. I might. Maybe I should, but not right now. Okay, whatever. You get the point, man. You get the point. There's a lot of longs down there to clear out. That doesn't mean we have to go down there, right? There were a ton, and this is, I think, where a lot of people are going to cling to the idea that we have to go lower is because there's so many longs. Those longs can take profits at any time. They can close at any time. Just because there's a lot of longs down there, you guys, there was like $20 billion in shorts at the top here, or like in this area, and we still went lower. When we had this drop, the shorts were dominating the longs, and we still went lower. So longs are dominating shorts. If that's what you're holding on to go lower, it screwed you up in the bear market. It screwed me up. It'll screw you up in the bull market. And again, I don't know how accurate this data is, but I'm getting tired of trying to check it out. So let's just wrap this up. I've got nothing else really to say. I want to look at the short-term stuff. We've gone over all the macro stuff. 1 hour time frame, yeah, a little bit of bearish divergence. Volume looks fine. Stochastics look fine. MACD showing a little bit of bearish divergence as well. Again, pullback, but you know, it's 72.6K. As far as a pullback goes right now, I'm not thinking of anything too extreme. It's possible that we only go back to 68K and then continue to run from there. And then maybe then later we come down, something like that. I mean, you look really, really bullish here. You've just broken out. I don't know. I wouldn't be surprised if you came back to around 68K. Could you go lower? Sure. We've talked about that at length. But right now, 68K seems like a good area. Probably 68, 69, somewhere in there. 4 hour time frame. Very overbought on the RSI. Stochastics are bullish as hell, and so is the MACD. No signs of weakness there. And the daily time frame, I mean, again, this is actually another testament to just being in a bull market. You do not get this overbought in a bear market. You just don't. You never get that high in the overbought zone on the RSI in a bear market. You really don't. It's kind of incredible to see this. So MACD also looks very bullish on the daily time frame. Stochastics are bullish. If we're looking at this in the perspective of fibs, which we should, let's take two fibs. We're going to take the relevant fib from this, the most relevant fib here from a high to a low, and then we're going to take the all-time high, the cycle fib. Look at this. We're right in the golden ratio zone. 1 hour time frame showing signs of kind of slowing down. Everything else looks bullish, so that makes me think that if the 1 hour is showing weakness but everything else looks good, you might pull back again, 69K, 66K, somewhere like this, but then overall continuing to run up higher, and then you'll start to see that weakness in the 4 hour and the daily time frame, those divergences start to come up, and then we'll probably come back down for a greater pullback. If not, I mean, we could just keep moving up, but it all depends. That's probably weeks away. The short-term stuff, I think that we do pull back a little bit, 68K, somewhere around that area. It could be 69, 67. We could go lower, but technically the range to expect to be about 69K to about 66K. That'd be the range to expect support to be found. Okay. And I would even go as far as saying it's a range, but it's probably more specific also. It's not just like a range. It is a range. By the way, I'm not trying to be confusing. I know that's literally contradictive definitions that I'm giving you, but by the way of the fibs, just the fibs alone, this is the range you'd expect to find support. But we've got more than the fibs going on. We've got price action. To me, looking at this here on the 4 hour, the 1 hour, whatever, we have a knot here. So it would make sense not to find support anywhere in this range, but rather to find support either right at the top of this range or all the way at the bottom of the range. So it is a range, sure. Most of the time you can find support anywhere throughout this range, but this is one of those times where I would say it's more like either the top, that 60, it's either going to be 69, 68K or 66K. You're not going to get that in between, but it's all tight. It's all close. I didn't really need to explain that. It's all close anyways. Golden ratio, relative point of resistance. We look at the all-time high. I mean, you've gotten above the 236. The next technical target would be 77K, and that really could be where we top off. That could be where this initial, just like every bull market that we've seen before, has an initial area where it kind of tops off, right? This initial area where it kind of stops. Same thing over here, right? That you pump up and you've got that initial area, or even here, you're at the end of the bear market. You stopped off here and then you had a double bottom. Same kind of concept. You just have that initial area that you kind of stop off, assuming that we do continue higher. 77K, 78K, and maybe even upwards as 80K looks very possible. I know a lot of people are going to be waiting for this high to be given whenever we talk about the bull market. We get above this high, that means we're in a bull market. We now have a higher high, no more lower highs, right? People are going to be waiting for that before they officially give their stamp of approval. I know there's a lot of people who already give their stamp of approval now, and I think it's a bit preemptive, but things are looking good. Things are looking good, let's be fair. My stamp of approval firmly comes in once we get above this high. I'm going to say once we get above this high here, 76K. We're above this very significant area of resistance here. We're above the prior cycle's highs, right? Like this and then on top of that, we're very close to the 382, which we typically don't see that type of retracement in a bear market. So, or we see that after the end of the bear market has been had. So, that's my thoughts, man. That's all I got for you. I don't have anything else. Hit that like button, subscribe. Thank you all for being here. What a awesome time to be in crypto. I hope everybody's having fun. And again, be prepared. Just be prepared for some downward volatility. 69, 68K, somewhere in there. And if that doesn't hold support, we could go back to 63K. You go all the way back to 63K, that's a higher low, and we're still in a bull market. You know, it's still we could see lower lows. It's still early. It is still possible to see lower lows, but if this week closes here, this month closes up here, guys, I mean, it looks like it's starting. It looks like the bull market's starting. And if it is starting, it's starting earlier than it ever has before. This could really be a special cycle to witness because, I mean, you think about it in the 4-year time frame, right? The 4-year cycle, the bull market should end, quote unquote, should end in what, 2028, 2029? Is that right? When would it end? Let's see. If you're going off the 4-year cycle, right? Because from cycle high here to the end of the bull market here, that was 40 months. From a cycle high here to the end of the bull market, that was 47 months. And again, if we take into consideration that kind of crab market, maybe 44 months, very similar time frame there, right? From a cycle high here to over here, it's 49 months, 40, 49, 44, whatever, somewhere in that range, okay? Cycle high, we go to 40, that's, okay, so that's early 2029 to potentially late 2029. That's Trump's last year in office. Not financial advice, not a financial advisor. Love him, hate him, whatever. We all know that the Trump name is important to this man. We all know that the crypto vote helped him get into office and that he's a very crypto-friendly president. We've never seen a more friendly administration in the world for crypto, and at least on paper, at least what they say in the media. This could be getting set up, you guys, for a finale. Like, imagine all the hate, all the grief, all the smack talk that we've gotten in the first half of this administration. Haha, the crypto bros voted for Trump and he's dumping all their bags. But then by the end of it, it's just like Bitcoin's at $1 million. Anybody who held all the way through, anybody who bought the dips, anybody who was around in the stock market, in the crypto market, in the commodities market, by the end of this administration, I don't know. I think they're setting up for an economic boom over the next 2 years. When I say they, I mean the United States of America. We, us. They, the administration. Maybe not. Maybe it's just a fancy story. I'm painting a picture that doesn't deserve to be painted, but I don't know, guys. Cycle's projected to end sometime in 2029. That's Trump's last year. Election time is in November. If we saw 49 months from high to high, that is November 2029. That's the longest stretch, I think, between cycle highs that we've seen before. We could see it again. Here, I think this is the shortest stretch. Again, this is why I don't think that we had a bear market here, actually. Everything about it, the bull market, the bear market, it's all weird. I think this is just one giant cycle. And actually, look at that. Look at that. From the low, From the low, look at that, 47 months. It was one giant cycle. I'm telling you. 40 to 50 months, something like that from the cycle high, puts us in 2029. Donnie's going to go out with a boom, and I think so will the crypto space. We've got a lot of time. It's 2026. It's not 2029. We've got a lot of time to accumulate. There's a lot of time to set yourself up. A lot of time. That's so much time. And even after things start, there's a lot of time. A lot of time, you guys. Keep your cash. Keep that dry powder on the side. Buy the dip. If you're aware of any cryptos right now that haven't caught a ride up, that haven't gained some momentum here, that are maybe still on discount, go for that. But don't, maybe that's a sign too. If there's any cryptos that are on discount while everything else is going up, that might be a sign that that's not something to invest in. I don't know. KTA is a bad example. It dropped, but it was a security breach. I think this is actually a really good, man, if you have any dry powder, not financial advice, not a financial advisor, I would scoop up some KTA personally. Because it's a security breach. They were very transparent about it. They're very open about it. They talked about it. They're working it out, and they're going to pay people back who are affected. They're doing everything the right way. Anytime that we've seen this happen, that only bodes well for the business, right? Bybit had the same thing happen. They had like over $1 billion hacked from them. They paid everybody back. They had everybody's money covered, and Bybit's one of the biggest exchanges in crypto now. This is back when they were starting. They weren't one of the biggest exchanges. They were up and coming, but now they're one of the biggest exchanges, and this happened in their early days. How you handle negative situations impresses people. It builds confidence. It builds trust, because that's why I think a lot of cryptos don't see truly explosive market cap valuations until their second bull market, because investors want to see, smart money wants to see how you handle the bad times. Are you going to cut and run? And again, that's kind of something to keep in mind too whenever you're investing in coins. Don't FOMO into coins that are pumping right now. Not financial advice, not a financial advisor. Don't do it. I mean, do it if you want to. We're still at a relative low point overall. We've got years before this thing grows, but if you want to be strategic and make the most out of this, you want to milk that lemon for all it's worth, be patient, be strategic, be tactical. But look for the cryptos, the projects that were building in the bear market, that stayed around. They didn't give up. They didn't go on to start another project. They're still building, and they have been building. Those are the ones to pay attention to, I think. And anyways, the ones that can roll with the punches, those are potentially good investments. Hit that like button, subscribe. Thank you all for being here. This video went on way longer than I thought it would, but I hope you enjoyed it. Take care. Bye-bye.